Welcome to another Tax Talker. Thanks for clicking. I really do appreciate it. On today's episode, I'm showing you how to calculate your additional refund for no tax on tips and no tax on overtime from the One Big Beautiful Bill. And we're going full nerd mode here. There is a spreadsheet linked in the description. It's a link to Google Drive where you can download your own copy of this spreadsheet and manipulate it locally. And this will show you, including the income phase-out range, how much more money you can expect to have in your pocket. You can even adjust your W-4 form early with payroll to get some of that money rolling in now. If you like this content, be sure to like, subscribe, hey, share it with a few friends at work, show them how they can calculate their refunds. But without further ado, let's get into it. All right, everyone, here is the spreadsheet on the screen now, and you can get your own copy in the description below. All this is meant to do is take your W-2s and just list them out with all the income on them as it's reflected in your pay stubs. And there in the box at the bottom, you're going to put in the tip or overtime estimate that you have of what you think the wages will be in that area. Quick Matt from the future interruption here, because I don't think I explained that well. We're talking about the 2025 tax years, so of course you won't have your W-2s yet, but a lot of that can be done with your pay stubs. You can extrapolate out or right around the midpoint of the year. You can also double check that with your 2024 W-2s. If you think your income will be largely the same as 24, give or take, that's a good place to start. At the top, it's also important to put whether you're going to be filing status as single or MFJ for married filing jointly. And as I fill this out here, if we put in $75,000 with tip income of 10 grand, for a single taxpayer, we can expect a $2,200 tax savings. And that's simply because you're firmly in the 22% tax bracket. So 22% of 10 grand is 2,200. That's a pretty easy example. And you can see how just putting in some more wages does not change that because there's no phase out range here. So it's just whatever your total tip or overtime money is expected. And based on the tax brackets, you're going to get a refund amount. If you're straddling between brackets, especially going from the 10 to the 22 or the 22 to the 24, that's where this is going to be more helpful. On the flip side, for married filing jointly, you can do the same. You can make the same calculations. The tax brackets are going to be different there, so you can have more income before hitting the phase-out ranges. Are you at the phase-out ranges or nearing the phase-out range? At $150,000 for a single taxpayer, you're going to be in a phase-out range, and you can start to see that the refund is not going to be as high as you go over that $150,000. For every $1,000 you're over 150, you're going to lose $100 of your deduction. So it's a relatively slow phase-out range. It's not meant to create a tax cliff where you're getting a very high effective rate. So it's a very gradual phase-out, but this at least helps you estimate where you're going to be at. For married filing joint taxpayers, that's at $300,000 of income. And it's the same phase-outs apply. Really important, this bottom box, it will give you an error if you put in a number over 25,000, because there's no scenario where that is permissible. But let's go over the specifics here. For tip income, you can have up to $25,000 excluded, single or married filing jointly. On overtime, it's $12,500 for a single person, up to $25,000 married filing joint. In this spreadsheet, it's not going to yell at you. If you put in $18,000 and you're only single, it's going to just assume that's tip income. So be careful there. Make sure you know those limits. Final thing I'd say is remember, on overtime income, it's the premium you're paid. It's not the full hour of overtime pay. So if you're paid $20 an hour and you work one overtime hour at time and a half, you got $30 for that hour. But the only part that's going to be tax-free is the $10, the premium that you're getting paid for that hour. So as you look at your pay stub, usually for an hourly employee, you're going to have a separate section for overtime, but it's going to be the full hour amounts. So I would just take those hours, usually it will list the hours, and I'd multiply it by that premium. For tip income, the reporting on this has gotten very good, and it's already required to be on the W-2, so it should just be on your pay stub already, and you can just extrapolate out what you think it could be for the year. You can also look at your W-2 from last year for the Social Security tips income and see where you had it and make sure you're kind of on the similar track. That's all I got for you. That's the Tax Talker for today. Hope you found this helpful and you're able to get a sense of what you can expect for a refund. If the dollar amount's pretty large, you might consider adjusting your W-4 form now. Just be careful about that, because at some point the W-4 form is gonna change, probably not till 2026 when they roll these out, to take into consideration tip income and overtime income. But that's still ways out, so you might consider updating it now to get more dollars in your pocket early. Thanks again for watching, everyone. I'd really like a comment with your tax questions about this bill or anything else, and be sure to subscribe to get my latest Tax Talkers coming up soon.